YouTubers, Mike Martin's here, Mike Martin's channel. I got a really good article here, emergency article. It's really early in the morning here, and I want to read this to you guys. It's from today. China clamps down on banks moving currencies overseas. Regulators bar bankers from making net renminbi outflows as part of capital controls regime. Very good article, people, based out of London. Chinese regulators are stamping out moves by banks to shift renminbi out of the country as they attack one of the few loopholes remaining in the country's strict new capital controls regime. The tightening is another setback for Chinese government's larger strategy of a goal that has taken a back seat to stabilizing capital outflows and the renminbi's depreciation against the dollar. So, too much money leaving the country. Guess what happens? Starts devaluating, and followed by many other drastic things that might happen. According to several people briefed on rules introduced this month, banks in Shanghai must import renminbi 100 for every renminbi 100 they allow a client to remit overseas, ensuring no net outflows of Chinese currency. Shanghai-based banks had been allowed to remit 160 overseas for every 100 they brought back into China. The clampdown goes even further in Beijing, where the banks import renminbi 100 for every renminbi 80 they remit overseas on behalf of clients. Ensuring the net inflow into capital, the People's Bank of China declined to comment. Chinese regulators have been concerned about the renminbi's relatively rapid depreciation against the dollar, which have slowed by selling down the country's foreign exchange reserves. To preserve China's forex stockpile, which stood just over 3 trillion at the end of last year, the central bank and state administration of foreign exchange have implemented a series of capital controls over recent months. In November, the PBOC and SAFE introduced stricter vetting procedures for China-based companies that wished to remit foreign currency for overseas acquisitions. Dividend payments and shareholder loan repayments by foreign investors were also subject to tighter scrutiny. As we are forex purchased by Chinese citizens, remitting renminbi offshore where it can be converted into foreign exchange was one way to avoid new capital controls. Such transfer also consisted with Beijing's desire to promote the renminbi as an international currency by encouraging companies to use it for trade, transactions, shareholder loan repayments, and dividend remittances. Chinese importers have trouble paying trade invoices dominated by renminbi, said one of the person briefed. According to the policy researcher at NSBO, net renminbi outflows from China exceeded 265 billion, 38 billion in US dollars in September, but have since plummeted as Chinese regulators closed the loophole they use for renminbi for foreign transactions, which had been used to evade capital controls, dropped sharply in December last month to its lowest since September 2015. MSBO said in a report on Friday, overseas banks, whose domestic market share in China is tiny, have been more affected by the clampdown because they derive of higher percentage revenues from cross-border businesses. This regulation is a bigger nightmare for foreign banks because we are more reliant on cross-border business than Chinese banks, one banker said. Bankers have also complied. The central bank and SAFE are only communicating regulatory window guidance, in quotation marks, over the phone during face-to-face meetings rather than in writing. They added that SAFE has instructed banks not to inform clients why their overseas remittances are being rejected and is checking their renminbi flows on a weekly basis compared to every month previously. It's up to us to sell clients, sorry, we can't let you transfer, the banker added, but obviously the clients know what is going on. This is not a secret. So, this is pretty big. And why am I sharing this under the housing crisis? Is because it's harder for people to get money out of the country. And the government, the Chinese government, is noticing a huge outflow of their currency leaving to be parked, once again, in the free market, in real estate, oil companies, shale companies, anything you could put your money into except in stocks or bonds. So this basically is a step towards fixing the housing crisis overseas. So it's going to be harder for people to get money out. It costs a lot more to get money out, and it just might not be worth it now. Paying 1.25 for every one you send out. It's kind of pricey and dicey. It's government's covering its assets. Government's realizing that too much is going out and people are parking their money overseas. And I've been saying this for years now, if you've been following me on this channel. I just wanted to share this. This is breaking news. I'll leave a link below. This is basically, if they tighten this and they follow this policy, start bringing out the champagne and drinks, because it looks like there's going to be a quick correction in the market, because less are buying, less will be buying overseas, less will be investing overseas. So let's see what happens with this. China's got its interests too. They got to protect their behinds, and Western countries are really doing nothing to protect their citizens. So it's really hard to gauge who cares more right now. But it looks like the Chinese are putting things into place. They don't want to go, the country doesn't want to go bankrupt. The country right now is one of the biggest, it surpassed the United States as one of the biggest superpowers in the world, economic-wise. So I see China closing its loopholes off, making it and sealing it so it protects its own assets. Anyways, guys, let me know what you think. I don't know anything. I'll leave a link below, comment. This is a big one, so if people know what they're talking about in this, you'll know how big this is for foreign investors that are trying to move money out of the country. Anyways, guys, comment, let me know. Bye.